You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, CEO of the MacBeth Group in Edmonton, and author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. Welcome to the show, Hilliard.
Thanks for inviting me on your show, Jim.
Real estate in Alberta cannot be a pleasant picture right now.
Yeah, and the numbers, as we talked before, the numbers really don't show the full reality of it. What happens is, in the early stages of a downturn or a bursting bubble, if you like, the activity dries up. And so people that are thinking about their house being worth, for instance, my neighbor, he was listed, in our neighborhood, the one house was listed for $2.2 million. He'd done a complete renovation from top to bottom. And of course, it was way too high. But I think the way he arrived at that number was that's what he had invested in. He bought the land at the peak, and then he invested a lot of money in renovating it. So he was trying to get his money out plus a small profit. So he's dropped his price, his asking price, to $1.9 million. So that's 15%. But it's probably not going to sell at $1.9 million either. So how much has housing gone down? It's impossible to say. If he had to drop that to $1.5 million, for example, which I wouldn't be surprised, even that number might not get it sold. That would be a reduction of 35-40% from his original asking price. So the numbers are very difficult to assess. The best measure in Canada is the Terranet National Bank Index, and it only deals with land title transfers and the price that's registered at land title. So of course it's 6 months even more behind the reality, because that's how long it takes to list a house and then get a sale, and then sometimes the lawyers are slow at getting the title transferred. So those numbers are starting to show a decline in Alberta of about 5 to 10%, but the reality, of course, is much, much worse than that. And if the oil price doesn't rebound here back up to $60, $70 fairly quickly, obviously the pressure is going to stay on for quite a while. We haven't seen in the numbers that are coming out very many foreclosures yet. We haven't seen any kind of sign of real stress yet. So it's almost like it's a pause, before the storm hits.
Now, you're also mentioning that the prices in Vancouver and Toronto may not be the horrendous numbers that get publicized.
Well, it's really hard to say that the numbers that get a lot of publicity are the very high end, like 2 and 3 and 5 million and 6 million, and of course the assignment flipping. There was a major investigation by a Globe and Mail reporter, Kathy Tomlinson, and it was really an interesting article. But those kind of transactions can really skew the sample, because you've got very large numbers, but the average house is still, in the $500,000-$600,000 range, except for those very high-end neighborhoods like West Van and places like that, so Point Grey. So, of course, all the publicity accrues to those large homes that are being bought sometimes to tear down and build an even larger home. But when you calculate an index, it's very tricky to figure out how much weight should you give to one transaction of 6 million versus a bunch of transactions of 500,000 or 600,000. So that one index I found recently, which is shocking. In fact, nobody believes it. I don't even believe it. But Stats Canada wouldn't lie to us, I don't think. So what Stats Can does is they do a survey of house builders. So they ask every major home builder in a neighborhood of Edmonton, Calgary, Vancouver, wherever, what's your selling price for your homes? What are they selling at? And they do a survey. And I don't know I think they do it monthly. And when you look at that survey, you can break it out for Vancouver, all the different areas. And prices have not really risen much at all. Now, which is a shocking result to me. I was really surprised. And so I've got to contact StatsCan and find out exactly what the methodology is on that. But one possible explanation, which might explain the lack of, there's really no increase at all in prices, is that they started to change the type of homes they're building. They're building much smaller homes, or they're gone from building single-family homes to condos or that sort of thing. And StatsCan should really adjust for that, but maybe they don't.
So, well, I know in places like Langley, row houses are going up hand over fist, and so they're not single family detached homes, and they're making much more efficient use of the land. So
what are they selling those for? About $400,000 or somewhere. Yeah. So to give you some idea of the index, how it would work is to say you had a whole bunch of transactions at $400,000, and maybe that maybe there's very few new homes being built at 3 or 4 million. Then that would skew the new home index way down, and the resale home index, which is the numbers that people see that are going up double digit in Vancouver, are based on the homes in Point Grey and West Van, and they don't get included. And one interesting thing about that is when they tear down a home in Point Grey and put a $6 million monster house on there, it probably doesn't get, even though it is a new home, it probably doesn't get captured in the new home survey, because that would just be like a spec builder that only builds one home a year or something. They don't have that. They wouldn't get a call from StatsCan asking about that. So it's a really difficult thing. So you've got a bunch of different things happening in Edmonton, Calgary, Vancouver, Toronto. In a couple of years from now, I suspect we'll look back on this and we'll say the downturn in housing in Canada started in the summer of 2015. So now we're like 7 months into it. It started in Alberta. It gained momentum in Alberta, and then eventually it spread to the other markets. The last index from Terranet National Bank, the one that I mentioned, which is more reliable, showed declines in 7 out of 11 major cities. There's 11 major areas that they cover, and 7 out of the 11 were declining in the month of January. And 4, of course, Toronto and Vancouver were 2 of the 4. I think Victoria and Hamilton were the other 2. Can't remember exactly. So that shows a sign that they said they never actually have had 7 declining at the same time before. That's very unusual.
And there's a new phenomenon too in BC where we had a shortage of trades workers. All of a sudden, the people who used to live in BC and went to Alberta to work are now leaving Alberta and coming back to BC, which has made a lot of people happy because they couldn't find the tradespeople. I
don't think there'll be any problem finding tradespeople unless somehow the people stay in Alberta, sort of waiting for the jobs to come back. But if they do that, I think they'll only do that for a brief time. Where they would go, they might not go to BC as much as they might go to Ontario. There was a lot of the BC industry growth is pinned on the hopes that there'll be an export liquefied natural gas industry build starting pretty soon, and that's starting to look a little shaky. There was an export. Actually, today is a momentous day in the U.S. because it's the first shipment of liquefied natural gas, I think, out of someplace like Louisiana. Originally, the terminals that were built in the United States were to import liquefied natural gas. It's hard to believe now, but as recently as 5 years ago, they were thinking they were going to have to import liquefied natural gas. They discovered that they had a surplus, so then they changed all the terminals to be export terminals rather than import terminals. That took a couple of years, and now they've started to ship their surplus. And the numbers that I've seen are pretty scary in terms of the size of the natural gas surplus in the United States. And the price of natural gas is down to $1.70 in U.S. dollars on the world markets, which is that's getting to the range. I remember in Alberta in 1986, it got down below $1 U.S. per MCF, and I think $1.70 today would be equivalent with inflation to about $1 in 1986. So we're right back to where we were in the mid-80s, and that was when we were talking about shut-in gas. There's too much gas, surplus of gas. Americans didn't want our gas from Alberta, so it just sat in the ground and waited for prices to recover. And eventually, prices did recover, but it didn't happen fast. It was basically 10, 12 years later that prices finally recovered.
Well, I've heard of a new play for Alberta's old oil wells is that they're full of brine, and that brine is full of manganese and lithium. And, of course, the lithium is needed to make those nifty batteries that Tesla wants.
Tesla is building the largest, currently they occupy in Fremont, California, the largest building in the world, which they took over from a joint venture between General Motors and Toyota. And but they're constructing the Giga battery factory in Nevada, near Reno, Nevada, I think, and it'll be the largest building in the world when it's finished. So it'll be even bigger than the one they currently occupy. They got a tremendous deal taking over the one in Fremont, California. It's got the capacity to build 500,000 cars a year, and they need lithium. And apparently lithium isn't all that rare. Apparently it's actually available in fairly large quantities, but the number of batteries and the amount of batteries that they're talking about for the electric cars that they want to build is so large that people are going to have to find new sources of it for sure.
So those old Alberta oil wells may be that source.
Well, the problem Alberta has, I mean, I always sound like, I feel like, I hear myself, I sound like I'm down on Alberta, and I guess I am a little bit down on Alberta right now. And there's so many opportunities elsewhere. But the problem again comes back to our cost structure in Alberta. Like, because of the way we did the oil sands, and we did it to ourselves. It's our own fault. Costs ran up so high in Alberta because people were getting paid easily $100,000 a year for doing a laborer's job, right? So there's lithium available in other countries at much cheaper prices than what we'd be able to produce it here in Alberta. So it's all about the cost, and that's going to be difficult. And it's really hard when people are used to making a certain amount of money and they've got a big mortgage and an expensive house and a couple of car leases and a snowmobile and all that. It's extremely difficult to go to them and say, oh, by the way, you're going to take a 30% pay cut. Well, first of all, it hardly ever happens, and so people aren't expecting it. And secondly, they don't react very positively when you do that. It's like, now if it's happening to everybody, like if everybody in the company and everybody in the neighborhood is all getting hit with that at the same time, then it's easier to accept. But and then they see announcements that the CEO of a major Canadian bank gets a pay increase of $1 million a year or something like that, and they get really angry when they see that kind of thing. Well,
I was just going to. There were two things. First of all, the BC budget that was released. One of the things it did was chastise Alberta for not diversifying its economy like BC has. I've never seen a provincial budget do that before, where they bark at somebody else to make themselves look better.
It was, it's really a strange thing to do. I know that, maybe it's a valid criticism. I don't know, but it's just very odd for a premier to do that to another province. And then something even odder happened recently in Alberta, and I don't know if it's hit the news, but our recently elected Premier Rachel Notley went down to Ontario to do a fundraiser for a $10,000 a plate dinner for the Ontario NDP. Of course, they're not in government. I think the Liberals are in government down there. So she was trying to help them out. And the odd thing about that is the first bill that they introduced in the legislature after their big election victory in May of last year was to ban all corporate donations and all union donations to politics in Alberta. So now she's on. I heard her on the premier on the media this morning trying to defend that trip, and she had some very plausible arguments why it made sense. But I think she's fighting a losing battle. The optics of it are so bad that I don't know what were they thinking. So there's two examples of people making really poor decisions. But the other thing that came out today in Alberta was the estimate that the deficit would possibly go to $10 billion. So, but getting back to the diversification criticism, it's just really hard to diversify an economy when so much money is going through, the energy sector. It's just, you'd have to say, okay, we're not going to do that. That's going to make us $1 billion a year, but instead we're going to try this other thing, which may or may not work out. Right? So, I mean, people would get laughed, out of the room if they tried to suggest that. So. That's why it doesn't happen. That's what's interesting about recessions and crises and that sort of thing is that saying of never waste a good crisis. And the reason I think for that saying is only in crises do you have the opportunity to actually make real change. And so we're coming up to one of those opportunities in Alberta. And so the question is, what would be the new direction? There's even one report out today that says that maybe Alberta oil may not be needed. Like it's expensive oil. It's like the North Sea. There's other oil that is available much cheaper and much closer to tidewater.
Well, also in Britain, you say North Sea oil. They've made a major oil discovery near Gatwick Airport, just outside of London. They call it the Gatwick Gusher.
Really?
I mean, why go all the way to the North Sea when you can just pump oil next to London?
Well, that's the problem. And the big game changer was shale oil, because, Quebec, for instance, has shale oil, and they refuse to drill for it, right? So New York has shale oil and gas, and they refuse to drill for it. Pennsylvania is going crazy drilling for shale gas, and they're making a fortune. So England, as far as I know, England has been reluctant to approve. But if the money's there and if it makes that big a difference to the economy, probably it will get approved eventually. So where does that leave North Sea and Alberta and these high cost areas? It's time that we probably started thinking about diversifying. I remember in the late 70s under Peter Lougheed, he was really serious about diversifying and spent quite a large amount of government money, which seemed to be abundant at the time, trying to encourage diversification. But over the ensuing 40 years, or I guess 35 years, not very much diversification actually happened. So it was a lot of the efforts were failures too. One of them was Novotel, which was manufacturing mobile phones, So it's very difficult to.
Although a reporter did do some digging around, and he found that the Alberta economy was actually more diversified now than it was 10 years ago. So some had taken place, and for BC to jump all over them, BC's numbers were wrong. They're using information that was 10 years old.
Yeah. I know. I think that the whole argument about diversification seems kind of lame in a way, unless we could find a whole new era. That I think one of the opportunities in Alberta would be energy from other sources. Like we've got tremendous wind energy because the air flows over the Rocky Mountains, and especially in southern Alberta, there's like really strong winds, almost 365 days a year. So the wind turbine possibilities are fantastic. And then solar. Alberta's got so much sunshine that it's probably one of the best jurisdictions anywhere for solar, and we don't have the heat. So I learned that in Arizona, where they have obviously lots of sun as well, the problem is in the heat of the summer when it's 36 degrees, the solar panels really don't work very well. It's too hot, and of course that's when you need the electricity for air conditioning. That's when everybody's got their air conditioning going full blast. So Alberta's got an advantage there. So if we could find some way to generate some of that energy from renewable resources, then that would be...
Well, there's brand new technology that uses a polymer that can turn any parking lot or highway into a solar panel. Then you put that on the roof of buildings. All of Alberta would be a great solar generator.
Exactly. Or like the other one would be if you had cars with batteries in them that need recharging, and you had the panels. I don't know if this would work, but on the highway, and as you drive over them, you get a charge. So that would be really quite interesting too.
In England, the new freeways do have a green lane that recharges your electrical car.
There you go. So, I mean, that would be fantastic. Now, BC has an incentive. If people buy electric cars, you get a some kind of a $5,000 thing, I think, or something like that. But Alberta doesn't have anything right now. That's one of the things that the new government, the NDP government in Alberta, is, it's coming up to 1 year now. I think it's 9 months and counting, and they really haven't taken any bold steps. And the few things, the promises that they made, like reviewing the royalty structure, for example, were I think for really disappointing to their base because they didn't really do anything.
They didn't change a thing. It was just anything. Continue on. We'll have more with Hilliard MacBeth right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Bird Dog and the Vintage Electric Band coming to Fort Langley, Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Hilliard MacBeth. One of the things that we started to chat about was how are the Canadian banks doing compared to their American counterparts? And what kind of excuses are the Canadian banks giving for laying off thousands of workers but giving their bosses giant bonuses and pay raises?
The bonus culture in Canadian banks is just phenomenal because when you think about it, it's a huge bureaucracy. And really what impact can one person really have? Most of the deposits are guaranteed by the Canada Deposit Insurance Corp, so the government's really on the hook for that. And then most of the mortgages, about 70% of them, are guaranteed by CMHC or one of the other insurers in Canada who are backstopped by the government as well. So the people in the bureaucracy in the Canadian banks aren't really risk takers; they're risk avoiders. And generally, people that don't take any risks, are supposed to get paid well, but not bonused. And but I checked the numbers, and the total profits of the Canadian banks in the calendar year that just ended was about $35 billion. And there's about another, I think it's around $12 billion of bonuses that were paid out. It's just a phenomenal. If you take those numbers and add them together, it's close to half of all the profits made on the Toronto Stock Exchange. So it's a mystery. Canadians are so in awe of their banks that I don't think they honestly do not mind that people are taking these enormous amounts of money out of the system, but it doesn't make any sense. So one of the things that happens is when the Canadians have these earnings reports, as the banks are going through right now, they have a conference call, and it's quite entertaining. If anybody wants to do it, anybody can go on the website and just listen into the conference call. And the Canadian research analysts that assess the banks and put buy or sell on the ratings, they tend to basically follow the script. But some of the American ones who are used to talking to the American banks, they don't understand this Canadian banking thing because this is unusual. It's not normal like what we're talking about here about the Canadian banks with the bonuses and the profits and all that. It's in the U.S. they've been through that horrible financial crisis, and a lot of the banks haven't even been allowed to pay dividends. They're still restricted on paying dividends from the crisis by the regulators. So well, I was listening to one, and it's quite hilarious because the questions go along fine, and then an American analyst gets on and says, well, don't you guys have like an oil and gas industry in Canada, and aren't there going to be some losses? And so the CEO of the bank says, yeah, there's going to be some losses. We think the losses might go up to 50 basis points. So that'll be the only jargon I'll use. 50 basis points is half of 1%, just to give you a rough idea. And 100 basis points is 1%, and 1,000 basis points is 10%. So I checked, and the U.S. banks are assuming they're going to lose about 1,000 basis points, or about 10% on their oil and gas loans, which makes perfect sense to me because there's virtually zero oil companies in Canada that are making any money right now, and some of them are losing enormous amounts of money, and a lot of them have fairly large loans that they've taken out with the banks and other ways. So 10%, that means 90% of the loans are still going to be good. Only 10% are going to go bad. Seems quite reasonable. So when the Canadian bank CEO says, yeah, we've done a stress test, that's the term, and he said, if oil stays really low for a long time, and if this happens and that happens and the other thing happens, we think our losses might go from 25 basis points to 50 basis points. In other words, they would double. But it's still only half of 1%. So the American-based research analysts are going, what are you guys talking about? Have you lost your minds? Are you crazy? Like 50 basis points? So they're talking 20 times as much losses. So it's quite an interesting exchange. And so they're always very polite, and because of course the people that are asking the questions are also hoping to get some business from the Canadian banks in the investment advisory business, right? So they don't want to say anything too rude, but they kind of go, well, gee, I'm just having a little trouble kind of understanding this. You're saying that it's going to go from 25 to 50 basis points, but don't you have a lot of loans in Alberta? And then the Canadian CEO of the bank will say, well, yeah, but we work with our lenders or our borrowers, and we help them mitigate their losses, and we do all this stuff. And it actually got quite interesting on with one bank CEO a couple of days ago, because the American analyst said, well, wait a minute, are you saying that because all these loans have certain rules attached to them, right? They're called covenants. And the American analyst says, well, are you saying that if they break their covenant, you let them off the hook? Aren't there rules about that? Aren't there laws? Aren't you required to? And so then the bank CEO kind of backed right down, said, oh no, we follow all the laws and everything. But in the reality is that so that's the details. But the big picture, we haven't had a crisis in Canada that lasted long enough to get anybody really scared since the 1990s, when Olympia in York went under. There was a huge bankruptcy. Some people may remember it, but it was quite shocking. And they had borrowed a very large amount of money from the Canadian banks, and they could not pay it back. And the banks, in those days, the loan losses went up to 100 basis points, or one full percentage point. So not as high as the 1,000 basis points that the U.S. people are talking about, but much, much higher than the 50 basis points that the Canadian banks are now saying. So my prediction, it'll be up to 100 basis points at least before this is over, because it isn't just oil and gas. Of course, obviously, everybody knows my view on housing, that it'll spread to housing as well. And the story that bank CEOs have about housing, of course, is that while a CMHC we can claim an insurance claim with CMHC on those loans that are CMHC insured, and on the other loans, the regular loans, we take 20% down payment, so we can't get into trouble on those because housing prices could never drop 20%. Right? So that's their attitude. But I think what you'll find is that it spreads beyond CMHC, and even within the CMHC, it's basically CMHC is an insurance company, and the insurance company will send out auditors, and they'll say, they'll want to see the file, see whether all the rules were followed. And if somebody, for instance, exaggerated their income, or if somebody said they had a job and they didn't really have a job, there's already been one company that's been caught with fairly substantial fraud in the application for a mortgage. Then the CMHC will refuse to pay the claim, and then the bank will be on the hook. Where I think the bank should be on the hook anyway, but that's one of the issues with the Canadian banking system is this crazy way we do it, where the government, therefore the taxpayer, is taking all the risk. So all of that, the big picture is that I think a year from now we'll be talking about much higher than 50 basis points losses in the Canadian banks.
Hilliard, thank you very much for chatting with us.
It's a pleasure.
My guest has been Hilliard MacBeth, CEO of the MacBethGroup.com in Edmonton and author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. You can forward comments or questions for the show to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.